Hello students and welcome to the lecture. So students, as you can see here, that basically in this lecture we are going to start with the Indradhanush strategy to revamp the PSU banks. Okay, this is what we are going to start in this particular lecture, or we can say this is the topic that we are going to discuss in this particular lecture. Basically in this first we will take the introduction to the Indradhanush strategy, and then we will see the 7 elements included in it, like the appointments, bank board bureau, capitalization, strengthening risk control measures and the NPA disclosures, empowerment, framework of accountability, governance reform, and at last we will see the summary of all these. Okay. But before this, there is a small disclaimer that we all are required to understand. Okay. So a disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, please contact us at sathee@iitk.ac.in and we shall remove the images. Okay. Now let's first begin the introduction. So, Indradhanush strategy to revamp the PSU banks. Public sector banks, which are under the government, plays a vital role in India's economy. But in the last few years, the PSBs are having the lower profitability, mainly because of the provisioning for the restructured projects as well as because of the gross non-performing assets or NPAs. Therefore, to revive the fortunes of public sector banks, the government unveiled a 7-point plan encompassing rupees 20,000 crores immediate fund infusion. It means to infuse this much of amount into the banking, creation of a single holding company, and minimizing the political interference so that the banks could work as per their will. The government has renamed it as a Indradhanush, also includes setting up of a bank board bureau for broad level appointments and a performance-based monitoring mechanism. The strategy Indradhanush actually focuses on systematic changes in state-run lenders, including a fresh look at hiring, a comprehensive plan to de-stress polluted lenders, capital infusion, accountability incentives with higher efforts including the stock options and cleaning up governance. The 7 elements that are here: first, appointments; second, bank of board bureau, or you can say bank board bureau; capitalization, de-stressing the public sector banks; empowerment, framework of accountability; governance reforms now. So first, if we talk about the appointments, it's the first element of the Indradhanush strategy. So the government decided to separate the post of chairman and managing director by prescribing that in the subsequent vacancies to be filled up, the CEO will get the designation of MD and CEO, and there would be another person who would be appointed as a non-executive chairperson of public sector banks. First, this approach actually based on global best practices as per the guidelines in the Companies Act to ensure the appropriate checks and balance. Private sector candidates also allowed to apply for the position of MD and CEO of the 5 top banks. Therefore, Punjab National Bank, Bank of Baroda, Bank of India, IDBI Bank, and Canara Bank. Got it? Second is Bank Board Bureau. Second element. The Bank Board Bureau will be a body of eminent professionals and officials, which will replace the appointments board for appointment of whole-time directors as well as the non-executive chairman of public sector banks. They will also constantly engage with the board of directors of all the public sector banks to formulate appropriate strategies for their growth and development. The Bank Board Bureau will comprise of a chairman and 6 more members, of which there will be officials and 3 experts, of which 2 would necessarily be from the banking sector. Now, the third is the capitalization. As of now, the public sector banks are adequately capitalized and meeting all the Basel III and RBI norms. However, the Government of India wants to adequately capitalize all the banks to keep a safe buffer over and above the minimum norms of Basel III, so that if anything happens internationally or as per the accordance of Basel III, the Indian banking sector must not get affected by it. As per the official, the capital requirement of extra capital for the next 4 years up to financial year of 2019 is likely to be about rupees 1,80,000 crores. Is still the same. There is no change in it. The estimate is based on the credit growth rate of 12 for the current year and 12 to 15 for the next 3 years, depending on the size of the bank and their growth ability. Out of the total requirement, the Government of India proposes to make available rupees 70,000 crores out of the budgetary allocation for 4 years as per the given below. So this criteria they had followed in it. Okay. Like for financial year of 2016 to 17, 15 to 16, 25,000 crores, 16 to 17, 25,000 crores, 17 to 18, 10,000 crores, 18 to 19, 10,000 crores. At last, total is 70 crores. Improved valuations coupled with value unlocking from non-core asset as well as improvements in the capital productivity will enable PSPs to raise the remaining rupees 1,10,000 crores from the market. Now, the fourth strategy is strengthening the risk control measures and the NP disclosures. Besides the recovery efforts under the DRT and SARFACI mechanism, the following additional steps have been taken to address the issues of NPAs. First, RBI released guidelines in 2014 for early recognition of financial distress, prompt steps for resolution and fair recovery for lenders, framework for revitalizing distressed assets in the economy, suggesting various steps for quicker recognition and resolution of stressed assets. Second, creation of a central repository of information on large credits, CRILC, by RBI to collect, store, and disseminate credit data to banks on credit exposures of rupees 5 crores and above. Formation of joint lenders forum, correct action plan and sale of asset. Flexible structuring of long-term projects, loans to infrastructure and core industries. Thereafter, willful default non-cooperative borrowers. RBI came out with a new category of borrower called non-cooperative borrower. A non-cooperative borrower is a borrower who does not provide information on its financings to the banks. Bank will have to do higher provisioning if they give fresh loan to such a borrower. Fresh exposure to a borrower reported as non-cooperative will necessitate higher provisioning. Asset reconstruction companies, in short known as ARC. RBI has tightened the norms for ARCs also. Establishment of the 6 new DRTs. The government decided to establish 6 new debt recovery terminals, first at Chandigarh, Bengaluru, Ernakulam, Dehradun, Siliguri, Hyderabad, to speed up the recovery of bad loans of the banking sector. Empowerment. The government issued a circular that there will be no interference from the government and banks to encourage their decisions independently, keeping the commercial interests of the organization in mind. With autonomy comes accountability. Accordingly, banks have been asked to build robust grievances redressal mechanism for customers as well as staff so that concerns of the affected are addressed effectively in time-bound manner. The government is committed to provide required professionals as NODs to the board so that well-informed and well-discussed decisions could be taken. Framework of accountability. The present system for the measurement of banks' performance was a system called SOI, Statement of Intent. There were 2 changes that is being done in SOI, which are as follows. First change is a new framework of key performance indicators, KPIs, to be measured for performance of PSPs is being announced, divided into the 4 sections totaling up to 100 marks. 25 marks each are allotted to indicators related to the efficiency of capital use and diversification of business processes, and 15 marks each are allotted for specific indicators under the category of NPA management and financial inclusion. The total marks to be allotted for quantifiable, measurable criteria is 80. The remaining 20 marks are reserved for measurement of qualitative criteria, including the strategic initiatives taken to improve the asset quality, efforts made to conserve capital, HR initiatives, and improvement in external credit ratings. Thereafter, the governance reform. The process of governance reform started with the Gyan Sangam, which is the conclave of PSPs and financial institutions organized in Pune. There was focus group discussion on 6 different topics, which resulted in specific decisions on optimizing the capital, digitizing the processes, strengthening the risk management, improving the managerial performance, and financial inclusion. The decision to set up a bank board bureau, which was subsequently announced in the budget speech of Honorable Finance Minister, came out of the recommendations of Gyan Sangam. The Gyan Sangam recommendations, including the strengthening of risk management practices, each bank agreed to nominate a senior officer as Chief Risk Officer of the bank. A special training program for Chief Risk Officers was recently organized by the Center for Advanced Financial Research and Learning, CAFRA. Governance reform. The government has been consistently engaging with the banks through review meetings and sessions for strategic reviews, etc. The focus is on improving the HR management practices, removing the barriers so that the banks could share and work together on common resources. Various steps have been taken to empower banks. Note: the Indradhanush framework for transforming the PSPs represents the most comprehensive reform effort undertaken since banking nationalization in the year 1970. Here we have finished the topic. Now it's part for the summary discussion. We have taken the overview. Key elements of the strategy like immediate fund infusion, holding company creation, minimizing political interference, bank board bureau, performance monitor, governance reforms. Then we have talked about separation of roles, bank board bureau, capitalization of plants, in which we talk about total requirement, government allocation, market raising. Addressing of NPAs, in which we talk about regulatory guidelines, central repository, joint lenders forum. Borrower classification, like the non-cooperative borrowers we have talked about. Debt recovery measures, new debt recovery tribunals we have talked about. Governance and accountability, government's roles and grievance redressal we have talked about. Performance measurement changes, new KPIs framework we have talked about. Quantifiable criteria, 80 marks we have talked about. Qualitative criteria, 20 marks we have talked about. And with this, we have finished this lecture. It is requested and advisable to all of you, kindly revise the facts and figures at all we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.